There you have it, 68 points higher on the Nifty.
Right now, at least the frontline screen is looking a bit tepid
For the markets, well, it has been seeing some drawdowns from the top.
It's a bit of a session of consolidation for our markets, right?
Yeah, I mean, consolidation with 300 points in the last two sessions.
Yeah.
So I think, that's the backdrop with which we came in this morning.
It's going to be a close for the Nifty below 19,100, a cut of 56 points.
Hello and welcome to Markets Today. I'm Nigel D'Souza, and here are the top headlines for the day. The Sensex and the Nifty give up early gains to end 1% in the red. Bank stocks lead the decline, even as mid-caps outperform in trade today. Blue Star gains after posting a strong growth with margin expansion. TVs Motors falls despite reporting a stellar quarter, hits its highest ever quarterly operating EBITDA. Gail and IOC gain after they beat street estimates. The Vodafone Idea management tells analysts on its investor call that the telco is close to concluding its fundraise in the quarter, with the promoter also infusing 2,000 crore rupees. It is also in talks with vendors on its 5G rollout. Ipca Labs gains after the US FDA gives its the Pithampur plant an EIR with voluntary action indicated classification. Pidilite gains as Goldman Sachs upgrades the stock. Siemens Energy may look to sell its stake in former parent Siemens AG. Oil prices recover ahead of the global central bank meetings. Tensions in the Middle East also kept prices higher. Metal prices fall on weak Chinese data. Well, let's run you through what we have lined up on the show for you. Well, in Market Opinion, we have Mark Mobius of Mobius Capital Partners. In Corporate Voices, we have Devansh Jain of Inox Wind. Well, let's start off with the day's market action then. The Sensex and the Nifty, they gave up early morning gains to end in the red. The Sensex ended with a cut of more than 200 points. The Nifty was down 50 points in what was a volatile session on the last trade. The banking stocks led the decline, but mid-caps managed to outperform the blue chips. The mid-cap index ended with gains of over 140 points. Rima Tendulkar joins us to fill us in with the day's action. Rima?
So today was a session of consolidation. Markets had put in close to 300 points of gains over the last two trading sessions. So today we spent a lot of time around the 19,100 mark. Finally, the Nifty snapped that two-day winning streak to close lower. We had a cut of close to about 0.3% on the Nifty. The Sensex ended lower, not quite at the day's low, which was 19,056. So we did recover from the, from those session lows, but still below the 19,100 mark. Banks, underperformed, and that sell-off particularly took place in the last 30 minutes. We also had that Nifty weekly expiry. Names like ICICI Bank, Axis Bank, Innocent Bank, HDFC Bank all took it on the chin. But the day belonged to the broader markets. The mid-cap index came off from the highs, but it still closed firmly in the green, and the advanced decline ratio was also positive. Reliance Industries, the star in yesterday's trade, gave up about 1% today. Autos were on the back foot. M&M, Eicher Motors recording losses ahead of auto sales numbers tomorrow. On the gaining side, SBI Life, HDFC Life, Titan had quite the up move in the second half of the trading session, and Kotak Mahindra Bank managed to see some green. Pidilite, there was that Goldman Sachs note, the decline in crude prices. So Pidilite was one of the star movers in the broader markets. Arvind, Piramal Pharma reacting to numbers. Vodafone Idea, where the management sounded hopeful in closing that fundraise. PFC REC saw some solid gains. And Inox Wind, there was a block deal of nearly 800 crore rupees. So that put pressure on the stock. And Butterfly, Gandhimathi and MRPL, despite good numbers, saw some profit booking.
All right, thanks for that, Rima. Well, let's get in some market opinion as well. Mark Mobius spoke to us earlier today. Let's hear out what he had to say.
As long as these bonds at 5%, there's going to be a great sucking sound away from the stock market. So people have got to be ready for a correction along the way, because a lot of people will look at the market and say, hey, why should I go into stocks when I can get 5% for my money? However, I still believe that in the next 5 years, the Sensex will go up to 100,000 mark.
There's also increasing chatter about US debt levels that are rising and ultimately have become unsustainable. Is that something that concerns a global investor like you?
Not really, because the debt, as we all know, is payable by printing more money. The U.S. government has the capability of printing. Now, what does that mean? It means inflation. And we've already seen the effects of the COVID money printing press. The reality is that inflation is with us and will continue to be with us, which is why it's so important to be invested in equities.
Well, moving to the second headline now, and that's in terms of earnings. Blue Star's numbers looked quite good, both on the top line as well as the margin expansion. Surbhi Sutaria joins us to fill us in with more details on that one. Surbhi?
Thanks so much for that. So, it was a really strong set of numbers from Blue Star. They saw revenue growth of 20%, EBITDA growth of 43%, margin expansion of 90 basis points, and PAT growth of 66%. Now, what has really worked for the company is their unitary cooling product segment, which is close to 40% of their revenues. Over there, they saw a revenue growth of 39%, EBIT growth of 90%, and margins have gone to 8.4% from 6.2% previously. Now, management said that the company has seen renewed demand in the room AC segment because of the extended summer, and also in the UCP segment, the demand has come more from the hospitality and the HoReCa segment, which is, commercial refrigeration part of it. And also they have recently completed a 1,000 crore QIP, which will lead to an accelerated growth in the near future as well. So that is why you can see that it is surging in trade today.
Got it. Thanks a lot for that, Surbhi. Well, TVs Motors as well fell close to around 0.5% in trade, despite reporting a stellar quarter. The auto major reported its highest ever quarterly operating profit of around 900 crore rupees. Sonia joins us to give us a quick analysis and what brokerages made of the stock. Sonia?
TVS Motor, I'm going with green over there because the numbers were very good. In fact, it was a record high EBITDA as well as margins that the company delivered this time around. And the earnings were quite strong, largely in line with estimates. The EBITDA margins came in at 11.1%. If you remember, TVS for the last many years was struggling between 9 and 10% margins for the longest time. But this quarter, it's the highest ever quarterly operating EBITDA of 900 crores. That's largely because raw material costs have fallen and the product mix has improved for them. So just take a look at it. 90 basis points year-on-year improvement in margins for TVS Motor. Revenue growth in double digit, about 13% growth is what we saw. EBITDA went up by 22.2%, and this at a time when exports have still not recovered. So a lot of positive brokerage reports indicate that once the export piece starts recovering, then TVS Motor will, be a big beneficiary of the revival in the export market.
Okay, and Gail gained after it came out with a good quarter. A good set of numbers in the second quarter. Revenues came in mildly below what the street was working with, but the EBITDA and the net profits beat street estimates, and that's why the stock did recover post those numbers. Sonal joins us to fill us in with a quick run-through of those numbers. Sonal?
Well, it was a good set reported by Gail. It was a top-down beat on all parameters. And if we look at the numbers as well, revenues at 31,807 crore rupees, EBITDA came in at 3,492 crore rupees, and this is where the major beat has come. This compares with a poll of around 2,500 crore rupees. Accordingly, margins are higher at 11% versus a poll of 7.2%. There was an expectation of a margin decline, but it has actually increased, so that bodes really well. Net profit accordingly has come in at 2,400 crore rupees. Now, across most of the segments, they have done better than what the street was working with. The natural gas transmission business has done EBIT of 1,290 crore rupees, which is largely in line with what Kotak was estimating. LPG transition slightly lower than Kotak estimates at 82 crore rupees. But the biggest beat has come in the marketing segment, where their EBIT has come in at 1,784 crore rupees versus a Kotak estimate of 1,000 crore rupees. Petchem, the losses have reduced and they are lower than Kotak estimates as well at 160 crore rupees. Similar is the story with their LPG and liquid hydrocarbon segment, where losses are much lower than what the Kotak estimates suggested, coming in at 17 crore rupees. So yes, it's a top-down beat, and that's something that the street should like. More commentary in terms of what the spot LNG prices and the cargo prices were is something we'll be watching out for. But yes, a good set from Gail this time.
Okay, thanks a lot for that, Sonal. Well, stay with us though. We can't let you go at that, because IOC as well came out with their quarter numbers, and its net profit beat street estimates, but the revenues were lower. The stock, though, ended higher. Tell us more, Sonal.
Well, for IOC, the numbers were good. It was again a top-down beat. If you look at the revenues, they came in at 1.8 lakh crore rupees, but EBITDA was a beat at 21,313 crore rupees, and margins came in at 11.9% versus an expectation of 8.7%. Profits accordingly were higher than what the street was working with at 12,967 crore rupees. GRMs at $18.4 per barrel was slightly lower than what the street was working with at $19.5 per barrel, but it is an increase of $6 per barrel on a quarter-on-quarter basis. Even their refinery throughput was largely in line with estimates, indicating that the refining segment has done well, but marketing continues to be under losses. There has been a sequential decline in marketing margins. But Petchem segment surprisingly has done well. They have actually turned into positive after seeing some losses in last couple of quarters. So EBIT has come in at 163 crore rupees, which compares with 88 crore rupees on a quarter-on-quarter basis. On a YOY basis, there's a turnaround. And remember, it is at a time when we are seeing some slowdown in the petchem cycle, so this comes as a positive. Overall, revenues are down 9%, EBITDA is down 4%, and net profit is down 6%, but the numbers are much better than what the street was working with.
Thanks a lot for that, Sonal. Well, that brings us to the third headline today then. Vodafone Idea as well moved higher on large volumes. This after the management told analysts on the investor call that it was close to concluding its fundraising plan in the quarter, with the promoter also infusing close to 2,000 crore rupees. That's not all. The company said that it was in talks with vendors on its 5G rollout. Rima joins us to fill us in with a quick analysis on what all she's picking up. Rima?
Thanks so much for that. So the key takeaway from the conference call is that the company is hopeful about a fundraise closing in Q3. Now, there are three elements to Vodafone Idea's fundraise. One is a promoter infusion. So they said that one of the promoters will directly or indirectly, they have committed to 2,000 crore of a fund infusion. Secondly, once that takes place, then they said that their talks are ongoing with external investors, and again hopeful that it should close before the close of this Q3. And finally, once the external fundraise is in place, the company can raise money from the banks. So the bank funding. Now on 5G, because remember, Reliance Jio and Bharti Airtel are close to completing their 5G rollout, but Vodafone Idea has not yet. So on that, they said that they are in talks with 5G vendors, but they will be able to start 5G rollout only once the fundraise is completed and they have that bank funding coming through, because it does require a significant amount of capex. Also, an important clarification is that at least as of now, it's not that the company has lost out on subscribers or is losing subscribers because it does not have a 5G offering.
Thanks for that, Rima. Well, let's slip into a short break. We'll be back in a jiffy. We'll run you through the remainder of the headlines that we are tracking for you. Welcome back. You're tuned in to Markets Today. Well, as promised, let's get straight to the fourth headline today. Pidilite rallied over 6% in trade after Goldman Sachs bets big on the stock. The brokerage firm has upgraded the stock to a buy rating. Nimesh joins us to fill us in with details of that report. Nimesh?
So they've upgraded the stock to buy now from sell, and they've raised the target price to 27.25 versus 23.50 earlier. Now, the report very clearly says that they believe that there are new drivers which are emerging for Pidilite, and also believe that in terms of earnings, the downward cycle is largely behind now. So on back of that, they've raised the earnings estimate by 4% and 8% for FY25 and FY26 on the back of revenues increasing from the new products, as well as EBITDA margins improving on the back of lower input costs. Now, even in terms of margin, their expectation is that the margins will recover sharply from 16.5% in FY23 to as high as 23% in FY26. So that's a key reason why a double upgrade on Pidilite to a buy now. Couple of concerns that they've raised, which can go against their buy call. One, of course, a big slowdown in the overall home construction, and two, if the input price goes up, then it will have a big impact on the margins as well. So these are the two downside risks. But given the earnings profile, given the fact that they believe the earnings down cycle is behind now, a big upgrade on Pidilite to a buy now, and they've raised the target price to 27.25 on Pidilite.
Thanks a lot for that, Nimesh. Well, in more stock-specific action, reports suggest that Siemens Energy is considering selling a part of its 24% stake to former parent Siemens AG. the partial sale would be a quick way to strengthen Siemens Energy Capital's base. Upasana Bhatt joins us to fill us in with a quick detailed analysis on all of that. Upasana?
Well, according to the Bloomberg reports, Siemens Energy is considering selling of stake of almost 24% in Siemens Limited to Siemens AG. The partial sale would be a quick way to strengthen Siemens Energy's capital base. Now, let us understand what is the key problem. Siemens Energy has a record order book of almost 109 billion euros, but execution is a key challenge. Mind you, in July, S&P has downgraded the long-term credit rating of the company to BBB negative. To meet the order book commitments, Siemens Energy has sought government guarantees. Now, talking about Siemens Limited, it owns almost 25% stake in Siemens Energy, and currently it still provides 70 billion euros of performance guarantee to Siemens Energy versus 40 billion 3 years ago. So indirectly, Siemens has a vested interest in the stability of Siemens Energy because it remains liable. Now, moving towards what are the other options for Siemens Energy? According to the Reuters, the company is weighing the sale of smaller divisions to boost cash following a recent deal to sell high voltage component division to a private equity firm named as Triton. Now, what are the implications for Siemens India? The transfer of stakes from Siemens Energy to Siemens AG has no direct impact on India operations. A deterioration in the health of Siemens AG, if it occurs, can have implications on India business, is what we believe.
Okay, all right. Thanks a lot for that, Upasana. Well, Honasa Consumer, which houses brands like Mamaearth, the IPO opened today at a price band of around 208 to around 324 rupees a share. Manglam Malu joins us to fill us in with more details. Manglam?
That's right, the much-awaited Honasa Consumer, which is Mamaearth IPO, opens today. It's on till the 2nd of November for subscription at a price band between 308 and 325. You are looking at the company to be valued at close to around 10,420 odd crores post-listing at the upper end of the issue price. Of this 1,700 crore rupee that the company is looking to get an IPO from, 350 plus crores come in as a fresh issue. The rest is an exit for existing investors itself. Now, the company has got a strong brand, Mamaearth, along with some other brands as well. But importantly, it's seen sharp revenue growth, compounding at over 80% over the last 4 years, turning into close to around 1,500 crores in the previous financial year as well. Importantly, while this revenue growth is high, they also enjoy high gross margins of around 70%, which is the highest in the industry. But on the flip side, the company's EBITDA margins are extremely low. In fact, in the first quarter of FY24 is when the company reported its highest EBITDA margins of 6%, and that's largely because nearly 35 to 40% of their revenue spends go into advertising, and that brings the important lever for the company in terms of cost optimization and margin expansion in the future. While most of their revenues come in from online channels, they do have presence in over 120,000 offline stores, and that they believe would be the next leg of growth. There is strong competition in the beauty and personal care space in which they operate, with a large part of their revenues coming from two brands, which is the Onion hair oil, Onion hair shampoo, as well as the Upton face wash as well. Important to know that the company is asking for valuations which are close to 100 times 1 year forward price to earnings, but then the management justifies it by saying that their growth is a lot higher than the industry as well.
Thanks a lot for that, Manglam. Well, moving on to a CNBC-TV18 exclusive then. Private equity firm CVC Capital is in talks to sell its entire stake of over 60% in Healthcare Global for around 4,000 crore rupees. This according to sources who say that KKR and Manipal hospitals are among the interested buyers. Nisha Podar joins us to fill us in with all of those details that she's picking up. Nisha, over to you.
That's right. At least 3 independent sources with direct knowledge of the development have shared with CNBC-TV18 that Healthcare Global is on the block. In fact, the promoter private equity player CVC Capital, which has a controlling stake in the company, has put the company on the block and has launched a sale process, is what we gather. For that, they have even hired a global investment banker to advise them on the transaction. Now, we do gather there is a lot of interest when it comes to the private equity players in a controlled deal, especially in the Indian healthcare space. And we have heard names like KKR and Bearing Asia, already interested parties and in the fray for this particular transaction. Also exploring is a strategic player, Manipal Hospitals of Ranjan Pai, and that's also turning out to be a big consolidator, and that is also interested in this transaction, and all exploring is what we gather from sources with direct knowledge. Now, the ask price for CVC Capital, we gather, is upwards of 4,000 crore rupees for their 60% stake in the company. And a lot of sources do point out that since it's a controlled deal and also they are ramping up the company with small acquisitions to beef up valuation, their expectation has been on the premium side is what we gather. Now, we reached out to all the participants concerned in this, and we did not get a comment, and especially another promoter entity, Dr. Ajay Kumar, he's still undecided on which way he'll go in terms of this particular transaction. Clarity may appear as the deal progresses further, is what we gather.
Oh, we'll stay tuned for that deal. Nisha, thanks so much for joining in and giving us that scoop that you're picking up. Moving to the fifth headline today, then, oil prices, well, they recovered in today's session, but they're down close to 4% in October. Metal prices also fell on weak Chinese data. Manisha Gupta joins us to fill us in with more details on that. Manisha.
Well, it hasn't been such a great day for commodities as a market, and on this week, actually, when you look at the month of October itself, it has been a negative for the industrial commodities at least. The crude oil prices did see a knee-jerk reaction in this month after the conflict between Israel and Hamas, but since then, because there is no disruption really to the crude oil supply or export, we've seen that premium go off from the markets, holding below $90 a barrel for both the crude varieties. And when you look at the month of October, we're down anywhere between 3 to 5% for the varieties of crude oil there. Same is the case with metals as a sector. It has been a very fragile recovery in case of China. The GDP numbers came in positive, but when you look at the PMI data and the service sector numbers that came in today have been below the street expectations, is the reason you have seen a decline come in yet again. So not just on a week-on-week basis, but for the month of October as well, we have seen a decline come in all of these metals. Copper is the only one perhaps holding with 0.5% gains for the month of October. But when you look at zinc, that one is down by nearly 6%. Aluminum is down 3%. Tin prices are trading in the negative as well, and you have almost everything trading in the negative for the month of October. The safe haven buying in the precious metals clearly has been a bright star there. So when you look at the gold prices for the month of October, we are trading up by nearly 9.5%. It has been 11% of a jump coming in for silver as well for the month of October, with all eyes now right now on the US Fed meeting, which is the announcement comes in tomorrow, and then you have the US non-farm payroll data that comes in on Friday. These couple of events will keep the markets quite volatile.
Thanks a lot for that, Manisha. Well, on that note, though, we'll wrap up on this edition of Markets Today. You stay tuned for more news and updates.